Good morning, all of you. I say Dr. Navindu Garg, Chairman, ICI Ghaziabad branch. On behalf of Professional Skill Enrichment Committee of ICI, we wish you all a happy Youth Skill Day. And on today, the Professional Skill Enrichment Committee, ICI, is organizing various programs across the country and also organized a week-long series on webcast from 9th of July to 15th of July to celebrate the World Youth Skill Day. As a part of World Youth Skill Day, the Professional Skill Enrichment Committee is organizing today a webcast on embedded finance and quantum computing skills. I welcome you to all of the participants of the webcast. CA Dr. Anuj Goyal, Chairman, Professional Skill Enrichment Committee, ICAI. CA Sipriya Kumar, Vice Chairperson, Professional Skill Enrichment Committee, ICAI. CA Nitin Gupta, Secretary, CIRC of ICAI. And today's resource person, CA Sajal Tyagi. And the event enabler, CA Vibhor Jindal, Vice Chairman, ICI Ghaziabad. CA Ankit Goyal, Sigasa Chairman. CA Abhay Kansal, Secretary Ghaziabad branch. CA Karan Garg, Past Chairman Ghaziabad branch. And other present over here. Let me introduce Mr. CA Nitin Gupta ji. CA Nitin Gupta ji is currently the Secretary of CIRC of ICI and Regional Council member from CIRC. He was in Managing Committee of the Ghaziabad branch of CIRC before joining the Regional Council of the ICI. Over to CA Nitin Gupta ji. हेलो नितिन भैया, माइक ऑन करो. I think there is a technical glitch. Some technical team.
Yes. Yeah. Thank you, Navindu ji, Chairman Ghaziabad branch, respected Central Council member CA Dr. Anuj Goyal ji, Chairman Professional Skill Enrichment Board, and all the managing committee members, CA Sajal ji, and all my dear professional colleagues. सबसे पहले तो आज we are celebrating today a यूथ स्किल डे. आप सभी को इस यूथ स्किल डे की बहुत बहुत बधाइयां, शुभकामनाएं. We are moving just because of our youth in a today's scenario. The future is of a youth. और जो हम सभी लोग हैं, हमारा जो परसेंटेज है सीएस का वो भी बहुत अच्छा जा रहा है. मुझे उम्मीद है कि जितना भी हमारा सीए का यूथ है वो मिलके हमारी इकोनॉमी में एक बहुत बड़ा रोल इन नियर फ्यूचर प्ले करने जा रहा है. तो आप सभी को एक बार पुनः बहुत बहुत यूथ स्किल डे की बहुत बहुत शुभकामनाएं और बधाइयां. ओवर टू नविंदु भाई. थैंक यू.
Thank you, Nitin ji. Now I introduce CA Sipriya Kumar, Vice Chairperson, PSEC ICI. CA Sipriya Kumar, Central Council member of the ICI. She had earlier served as CCM in 1619 and in the South SIRC in 1215. She is currently the chairperson of Sustainability Reporting Standard Board, ICI, and also the vice chairperson of PSEC, Corporate Law Committee, Governance Committee, and member of various non-standing committee of ICI. I think
let on she may join.
Okay. See, now I introduce our own CCM, CA Dr. Anuj Goyal ji, Chairman, PSEC. CA Dr. Anuj Goyal ji is a CCM Vice 25 of the Institute of Chartered Accountants of India, qualified FCA, FCS, FCMA, MCOM, LLB, PhD, DSA, DIRM, डिग्री ज्यादा है, टाइम कम है हमारे पास, अनुज जी पे डिग्रियां बहुत हैं। Beside that, he is a 6-time Central Council member ICI since 2004. He is chairman of PSEC, chairman of Ethical Standard Board, convener Publishing and CDS Directorate, vice chairman Sustainability Report Standard Board, vice chairman Taxation Audit Quality Review Board, and members of various non-standing committee. He is a dynamic Central Council member who always with the prime objective to serve the member of ICI at a large and always stand with. And for the member of ICI, he had earlier served as the chairman of CIRC of ICI and in other postings of CIRC of ICI, chairman in the Ghaziabad branch of CIRC of ICI before joining the ICI. Over to Anuj.
Thank you very much, dear Dr. Navendu Garg ji, our honorable event director and the chairman of the ICI Ghaziabad. First of all, I wish all of you very, very happy World Youth Skill Day. And on this occasion, we are celebrating, we are organizing 100 physical programs. And the flagship program today we are having at ICI Gautam Buddha Nagar. And our honorable president will be there. And last month itself, on 26th of June, we organized International MSME Day. We organized more than 100 programs on 26th of June. And the flagship program was there in ICI Ghaziabad. So we are trying our level best to see that how we can really do something very, very concrete through this professional skill enrichment committee. We are having our honorable regional council member, our honorable secretary of Central India Regional Council, very, very young and dynamic secretary, CA Nitin Gupta ji, who is really doing wonders for the cause of the youth. And on this World Youth Skill Day, I think Central Region is also committed to do something very, very concrete. And this program which we are having at Gautam Buddha Nagar today is the program not only of the Institute of Chartered Accountants of India, but also of the Central India Regional Council, because it is in the Central Region itself and in the state of the UP, from where the Nitin Gupta ji is the secretary of the Central Region. And of course, we are having the presence of CA Sajal Tyagi ji, our honorable resource person, very, very prominent resource person, and young chartered accountant. And on this World Youth Skill Day, we have chosen to see that how we can have the young speaker who can motivate our honorable members of the Institute of Chartered Accountants of India. We are having C. Ankit Goyal ji, honorable Sikasa, chairman of Ghaziabad branch. We are having C. Vibhor Jindal ji, our honorable vice chairman of Ghaziabad branch, and we are having more than 3,000 chartered accountants present live with us from each and every part of the country, outside country also. So I welcome all of you on behalf of the Institute of Chartered Accountants of India and on behalf of the Professional Skill Enrichment Committee of ICI. Friends, today is 15th July. We are having Dr. Sambit Mishra ji, very, very dynamic secretary of Professional Skill Enrichment Committee. Under his leadership, we are trying to do something very, very concrete for the best of the chartered accountants of the world. And for the first time in the history of Institute, this Professional Skill Enrichment Committee has come into existence. And we are putting our heart and soul to see that how we can really do something very, very concrete for the best of the accounting professionals of the world, the members of the Institute of Chartered Accountants. Friends, World Youth Skill Day is not just about the skills enrichment. It's about nurturing critical thinking, problem solving, professional skills, technological skills, other skills, and collaborative skills that will enable chartered accountants to navigate ever-changing world. On this World Youth Skill Day, on behalf of the Professional Skill Enrichment Committee of the Institute of Chartered Accountants of India, let us celebrate the boundless energy, creativity, and resilience of chartered accountants and recommit ourselves to enrich the skills of the chartered accountants. On this World Youth Skill Day, I wish for you the unwavering determination to pursue your passions, and the courage to embrace new challenges. May your skills become the tools that shape a brighter future, not just for yourself, but for the entire world. On this special day, I extend my heartfelt wishes for your continued success in acquiring and honoring valuable skills. May your talents flourish and may your contributions to society be recognized and celebrated. As a chartered accountant, our potential is limitless. So I once again wish all of you a very, very happy International Youth Skill Day. And in this webcast, friends, on embedded finance and quantum computing, participants will gain insights into the evolving landscape of financial technology. The session will begin with an introduction to embedded finance, exploring its key components such as APIs, banking, e-service, payment processing, and lending. We will discuss its transformative applications across industries, its benefits, risks, and challenges. The webcast will then delve into quantum computing, covering fundamental concepts like qubits, superposition, and entanglement, and examining its potential impact on the financial industry, particularly in areas like risk management and cryptography. And we are having the best to the resource person, CA Sajal Tyagi ji. I will not like to come between Sajal Tyagi ji and all of you. I once again welcome all our honorable delegates from each and every part of the world. And I once again welcome CA Nitin Gupta ji, our honorable Secretary, Central India Digital Council, CA Dr. Naveen Dugar ji, Chairman ICI Ghaziabad, CA Ankit Goyal ji, Chairman Sikasa, Ghaziabad branch, and CA Vibhor Jindal ji, Vice Chairman Ghaziabad branch, and Karan Garg ji, our honorable past chairman of the Ghaziabad branch. To the friends, today at 2:30 p.m. onwards, we are having flagship program of the Professional Skill Enrichment Committee on International Youth Skill Day at Noida, ICI Sector 62, Noida. I will request all of you to attend this International Youth Skill Day program, flagship program, today at 2:30 p.m. Our Honorable President will be there. Our Honorable, very, very prominent resource persons, Vinod Gupta sir, PG sir will be there, Vimal Jain ji will be there. So I will request all of you, all the members of the Central India Regional Council also, I will request Nitin Gupta ji also to ensure that this message reaches to each and every chartered accountant through email and SMS and WhatsApp. I will request Ghaziabad branch chairman also that how it can reach each and every member of this group so that each and every member can get the opportunity to be the part of this International Youth Skill Day physical flagship program. I once again welcome all our honorable members and of course CA Sajal Tyagi ji. So once I will request all of you to put your hands together and welcome CA Sajal Tyagi ji. Over to CA Dr. Naveen Dugar ji, Chairman Ghaziabad branch.
Thank you, sir, for your words of wisdom. Now I call CA Ankit Goyal, Chairman Sikasa, Ghaziabad branch of CIRC of ICI for the objective of program. Ankit Goyal ji. Mic unmute कर लें.
Thank you so much, CA Naveen Dugar ji. Respected Central Council Member and Chairman, Professional Skill Enrichment Committee, CA Dr. Anuj Goyal ji. Our CIRC Secretary, CA Nitin Gupta ji. Our today's resource person, CA Sajal Tyagi ji. Our Chairman of Ghaziabad branch, CA Naveen Dugar ji. Vice Chairman, CA Vibhor Jindal ji. Past Chairman, CA Karan Garg ji. A very good morning to all of you and wish you a very happy Youth Skill Day. I would like to explain you the objective of today's webinar. In this webcast, we are exploring the future of continuously evolving financial technologies with embedded finance and quantum computing. We are exploring various aspects of future of financial technology, embedded finance, and its key component and its application across industries, and the main benefits, risks, challenges, quantum computing, and its key components, impact of quantum computing on finance, and its main benefit, risk, and challenges. And today we have our resource person, CA Sajal Tyagi ji. CA Sajal Tyagi ji is a chartered accountant with a deep understanding of risk management, taxation, professional ethics, and soft skills. CA Sajal worked with ICICI Bank In credit risk department post-qualification, his passion lies in sharing knowledge and helping others navigate the complexities of finance and communication to the best of his knowledge. He is leveraging his expertise to provide valuable insight and support to those seeking guidance in financial realm. As we are very eager to hear our today's speaker, I request C.A. Sajal Tyagi ji for his deliberation. Over to C.A. Sajal Tyagi ji.
Thank you, C. Ankit Goyal ji. Thank you all the respected council members and all the office bearers for the kind words. The topic for today is the future of financial technology.
Sajal ji,
Yes, sir. Sharing my screen, just a second. Hello, my screen is visible.
yes, yes, go ahead.
So,
You just do it F5.
yes, sir.
F5 full screen. Yes, perfect.
So, the objective for today's session are to explore the future of financial technology, understand the concepts of embedded finance and quantum computing, discuss their applications and benefits, recognize the risks and challenges, examine a few case studies, analyze their future trends, and then we'll summarize the session with key takeaways. So, the future of financial technology, fintech as we say it, is poised for significant transformation driven by rapid advancements in technology, evolving customer expectations, and increasing regulatory frameworks. As we all know, finance and technology together go hand in hand, uh, and it is the future of fintech. So, the future of fintech will be characterized by innovation, collaboration, and a focus on creating more inclusive, secure, efficient, and effective financial systems that will be beneficial for the entire world or the industry at specific. So the major key trends and developments shaping the future of fintech are artificial intelligence and machine learning, as we all know about them, blockchain and cryptocurrencies, the decentralization of data, where anyone from anywhere can access data and information, regardless of being monitored by the central agencies. Then we have the digital only banks or the neo banks that have no physical presence at all. They are the future of banking, and as we move into the future, more and more banks will be opening in only digital mode, that will have no physical presence at all and will enable people to access banking from anywhere without any need to go to the banks, physical need to go to the bank. Then we have the regulatory technology. When the world of finance is evolving, or the world of technology, I must say, is evolving at a very high speed, the need for regulatory technology also increases. The technology that will regulate the entire landscape, that will make the standards, that will check the compliance, whether the companies that are involved in the fintech are following the standards and the procedures and are working in according to the law. Then we have embedded finance, quantum computing that we'll be talking about in the entire webinar. Then we have sustainability and ESG. Sustainability in today's world is really important, as we have to make sure the resources that we are using uh, for our benefits will be in such a manner that the future generations will get their share of resources as well, rather than just focusing on our needs. The focusing on the needs of the future generations to come is sustainability and ESG. So these are the key trends and development that we have to look in the future, that will be taking place in the finance world and the technology world. Let's begin with embedded finance. What is embedded finance? Embedded finance is the integration of financial services into non-financial platforms and ecosystems, allowing users to access financial products within the context of their regular activities. For example, payment processing in e-commerce platforms, lending services in ride-sharing apps. As you must have seen in various e-commerce platforms such as Amazon and Flipkart and many more, the payment services are embedded into the apps and the system itself. You don't have to visit for any other website or payment a specific payment app to make the payment. The payment services are interlinked in the ecosystem itself of the non-financial platform. So that makes us the embedding of financial services into non-financial platforms. Similarly, in ride-sharing apps like Uber and Ola, we while finishing the rides and sometimes in the advance also, we have to make the payment, and the payment services are present there itself. We have an option in the beginning and the after the ride is completed as well. So we can make the payment there itself without the need of going into another app. That is the meaning of embedded finance, the integration of financial services into the non-financial platform. For example, we don't have to go to another banking app to make such a payment. Now, what are the key components that enables the embedded finance? The first one being APIs, application programming interfaces, which enables the seamless integration of financial services into the various platforms. The application that we are viewing, that the interface that the user is viewing, that is the API that is well integrated into the various platforms that allow us to access the financial services from there itself. Then we have banking as a service, or what we call it banking entities to offer banking services. For example, in the background, when a non-financial platform is allowing you to make payments or accessing to the banking needs, there is always a banking service being provided to that platform. The service provider is providing banking as a service to the non-banking activity, which is allowing us to use the payment to make payments through the APIs. Then we have payment processing, which facilitates the payments directly within a platform, eliminating the need for external payment gateways that we have just spoken about. Then we have lending services. Nowadays, it is very common that non-financial platforms are offering us loans, credit services, and insurance services as well. So this lending is a financial service that is embedded into non-financial platforms, that is enabling people to access them without the need of going to the banking system itself. Then we have insurance. Insurance is the need of the hour. Every industry, every possible transaction that we are making is insured. 90% things are insured these days. So it becomes very essential for the non-financial platforms as well to provide an embedded insurance services inside their platforms only, which directly allows the platforms like retail or travel booking sites to ensure the services that they are giving. For example, you might have noticed in a Make My Trip application, while booking for flights or trains or buses, whatever travel arrangement you are making, they provide insurance services within them only, that take care of if there is a loss of baggage, there is an accident. It provides you with every type of insurance therein in that app as well. You don't have to go and take a separate insurance to go to a insurance provider, ask them for the quotes, and then provide the insurance. The insurance services embedded into the platform itself. So it provides you various services within the ambit of the ecosystem only. Then we have investment services. Various investment service providers and the apps or websites, they allow the users to invest within the apps they frequently use, such as through robo advisors or stock trading platform that is embedded in the applications itself only. Then we have regulatory compliance, which ensures that integrated financial services comply with relevant regulations and standards. This is by far, I think, the most important uh, aspect or the component of embedded finance, because while the landscape is changing so fastly in the technological world, regulation becomes as important as the services, because one cannot monitor everything that is happening behind the scenes. So for that, regulatory compliance needs to be so strong that all the financial services that are being provided should have been complied with the regulatory compliance beforehand only. For this point has to be embedded in all the services that are being provided on the behest of financial services. Because without regulation, a service provider might take advantages of the users, or any third party might take advantage of the users or the data that is being uh, shared across all the services, like important financial information, uh, passwords and credit card details, banking details. So the service provider itself should be regulated. That is why that is the most important component. Then we have the data analytics. Data is the gold of modern world. Anybody who can understand the data and provide the analytics on basis of it is and has been succeeding in the market. So the component here provides the utilization of data to personalize offerings, financial offerings, and enhance user experience. So on the basis of your uses or the past data, they will provide a personalized financial offerings, whatever you need. For example, if you opt for credit cards, they might provide you a personal loan for a larger purchase itself. So just an example on this, that the use of data analytics to provide personal financial offerings that is suited to the customized needs of every user, and it might vary from user to user. So these are the key components. Now we have the applications of embedded finance in various industries. So as we have already touched a few points here, e-commerce is the most important part, because nowadays e-commerce has taken over the entire population, and people are very much eager to use the e-commerce in today's world. So it becomes critical application of embedded finance in the e-commerce applications. For example, buy now and pay later. Everyone might have encountered it somewhere, that the applications itself provide that you can purchase the product or the services right now, and you can opt for paying the uh, consideration for such services or goods later on. And how does it happens? It happens at in such a manner that an invisible third party that is not visible to the user is giving a temporary credit facility, which is enabled by integrating of financial services in the non-financial platform. So it is a financing activity, but it is happening in a non-financial ecosystem at an e-commerce website. And the user might even not know it, who is financing or who is providing him the credit needs. But he'll have a great experience by buying the product now and opting to pay for later. Customers can pay in single installment and even multiple installment depending upon the terms and condition of such arrangement. Then we have in-app payments, as we have already discussed, enables seamless payment experiences without leaving the platform. We don't have to go to another platform or a banking app or another website to pay for our services. We can directly pay from inside the app only. Then we have embedded insurance, like we have discussed also, offers insurance for purchases directly within the shopping platform. You don't have to visit an insurance provider for insuring your goods or services. You can directly get insured inside the e-commerce application itself. Then we have the retail industry. How does embedded finance affect the retail industry? So now we have a very interesting point. Loyalty programs. We might all have encountered this in our life, that we are lured into signing up for cards or memberships in return for loyalty points or loyalty services that they might offer on the basis of the membership or the cards that you are signing up for. But how does it work? It integrates the financial rewards and cashback directly into the retail experience. You might opt for taking a discount on your previous purchases that you have purchased from the same platform on the current purchases. This is only happening because of the embedding of the financial services there. There's always a value that you are getting as a discount. So it is a financing activity only. Where you are getting a discount, but on the basis of what? On the basis of loyalty, that you are going to return again and again to the same platform for your purchasing needs. Then we have the personalized financing. Provides customized financing options based on the customer data and purchase history. We have touched this before. Then we have travel and hospitality. Travel insurance. Travel insurance is the most important commodity right now these days, because travel has taken up a lot of in almost every part of the world, and people are traveling post the COVID-19 scenario to the length and breadth of their countries or in between countries as well. So insurance become important because there is a lot of logistical problems that might they encounter. Their luggage might get lost. They might face delays in the air transfers. They might face an accident. So insurance becomes important there. So travel companies offer travel insurance during the booking process itself at a very minimum rate. So you can get insured for your goods, for yourself, health insurance as well as accidental claims, and you can do that within the booking ecosystem itself of the travel app. You don't have to go to another banking app for make or insurance app for making such transaction. Then we have dynamic pricing and financing, uh, which provides financing options for expensive travel packages. Travel companies these days are offering installment payments on your travel plans. They are offering their book at zero price and then pay later. Uh, they are offering this on the basis of embedding of financial services into the non-financial ecosystem. Then we have the healthcare industry. Uh, Healthcare financing offers financing solutions for medical expenses directly within healthcare provider platforms. You can opt for booking a test, a blood test, a simple test, or any major uh, test or doctor's appointment or any other appointment in the healthcare industry. You can directly opt it from the app itself, and you can make the payment itself there only. So that is the embedding of financial services into the healthcare application. Then in-app payments that enables you to make an appointment. Like for example, there is an app called Practo, and every major healthcare industry companies have their own applications for that purpose. Then we have the automotive industry. Automotive industry is the, I would say, it depends majorly on financing, because the entire chain of automotive industry works on the basis of financing from the manufacturing level to the customer level. In every step of this industry, financing is required. So auto financing becomes a very lucrative and important aspect of embedded finance, as it integrates car loans and leasing options directly into car dealership platforms. You don't have to go to a bank nowadays to take a loan from for to buying a car. The dealerships have integrated all the banking options available at their dealerships as well, and they offer you very competitive rates and the terms of the insurance there itself. You don't have to visit other places, only just the car dealership, and you'll get the auto financing there only. Then we have the insurance of the vehicle at the point of sale only, at the dealership itself. You don't have to travel to insurance company. That is the embedding of services. Basic idea is same in all these cases, the embedding of financial services into a non-financial platform or a service provider. Then we have the real estate mortgage services, which enables the mortgage approvals and financial processing within the real estate platforms. You don't have to visit or run to third party uh, approvals for getting approvals and verifications and all that. It is embedded in the real estate platform itself. Rent payment solutions, which facilitate the rent payments and tenant financing. If the tenant is facing some financial crunch, the application will finance the uh, rental for that month and provide the rent to the landlord, and the tenant will enjoy a period of payment depending upon the terms and conditions of such arrangement, and so that the seamless transactions can go on. Now you can get financing at every aspect of transactions these days. Then we have the education industry, student loans. Student loans are increasing day by day as the cost of education has gone up, and it is affecting the every kind of students these days, and people are opting for student loan, whether be it for graduation courses or post graduation courses or overseas courses. Now they opt for student loans. Such student loans are integrated into the applications and management into the educational platforms itself. You can get the loans while applying for the colleges there itself. Then payment plans for tuition. You can offers flexible payment options for tuition fees. You can pay for the tuition fees in installments, and like the options to get no cost EMIs, or that enables people to spend their payments and divide it into a term of period, like a loan, like a proper loan. So that is available for payment plans for tuition as well in the education industry. Then we have the transportation ride sharing apps. They allow you to pay from the application itself, and the driver insurance is provided within the app. Subscriptions are provided. You can opt for passes for monthly travel or very frequent travel. You can opt for different passes. For example, Ola ride sharing, or the Ola Uber, that shuttle services that provides distance travel between two cities or two places of metro cities. They allow you to have a pass, so you can use it for multiple transactions, which is embedded in the application itself. So these are the applications of embedded finance in the various industries. I think we have touched upon almost every industry. So you can get a better idea of how embedded finance works. Then we'll move on to the benefits of embedded finance. The major benefit is obviously the enhanced customer experience, the convenience the customers are getting. They don't have to visit more than one application. You are getting everything in one application. So that is a major convenience. Customer can access financial services seamlessly without needing to switch between different apps or websites. The speed of transaction, the faster transactions and approvals as financial services are integrated into the user journey. That has a very great impact on the mind of the user, as the more fast the services are being provided, the more likely user is going to visit your application again and again. That is a major, benefit while providing customer service. Then we have personalization, tailored financial products based on user data and behavior on the platform. Financial products for the customized needs of every individual. So that is also very lucrative to the user. That you can get customized and tailored financial products based on their historical data and behavior on that platform. While these applications like Myntra and Amazon and Flipkart, they provide very much suggestions on your sizes and your preferred choices of color, the preferred delivery choices, and all that. That is integrated into one platform. Then what it helps in the increasing revenue streams also. And how does it help it? It creates new revenue channels. Platforms can generate additional revenue by offering financial services like lending, insurance, and payments. That is not their core activity. Their core activity might be to sell clothes, or might be to sell shoes or anything. They might be selling any electronic or any customized gift hampers or whatever. But providing services like lending, insurance, and payments, they are creating a new revenue channel that is additional to their core area of business. Then obviously higher customer lifetime value. Enhanced services can increase customer loyalty and lifetime. As I said earlier, the customer is more likely to visit the application or the service provider again and again, where he is getting a greater or enhanced customer experience with speed, convenience, and personalization. Better access to financial services. This is the third point of benefit. Better access. Obviously, everybody if we talk about India, or majorly the metro cities or the tier 2 cities or tier 3 cities have access to banking channels, but in the remote areas, or where the banking channels are not present in the organized system, people might not get that much access to financing options. Their needs might get looked upon on this, but this is true in certainly most of the cases in the remote areas. And or even if there are banking channels present, they might not having the requisites of financing available with them, not proper legal documents or anything for getting the finance from the proper channels. So financial inclusion, people who might not have access to traditional banking can utilize embedded finance option, because embedded finance option is embedded in the application itself. If you are a user of the application, you do not need to go or access any other application or services or provide any other documentation on your behalf to get the financial access. If you are able to use one ecosystem, then you can use the finances as well. So that it is a great option for people who don't have access to traditional banking. Underbanked population, as I said earlier, people, those who in remote areas who don't have options uh, to traditional banks, non-financial platforms can provide financial services to underbanked or unbanked individuals. Then we have the operational efficiency, streamlined operations. It integrates the financial services into a non-financial platform, which reduces the need for multiple vendors and simplifies the operational process, or decluttering, what we call it. There's this concept in, as we all know it, in cost accounting, of decluttering, or just focusing, removing the non-value added activities and focus on only the value added activities. So by reducing the need for multiple vendors, what embedding of finance and non-financial ecosystem is doing, that it is simplifying the operational process. It has made things easier for the user as well as the service provider, which can make the providing of services in a more efficient and effective manner. Then we have the data utilization. Platforms can use existing customer data to offer more accurate and risk-adjusted financial services. You can as we have more and more data, the trends or the suggestions will become more impactful, because they'll have a larger the data set, the larger is the accuracy, more accurate and risk adjusted financial services can be provided. Then we have the competitive advantage, differentiation. Platforms can distinguish themselves by offering comprehensive services that include financial products. It is but obvious that a user is more likely to opt for a service that is providing in-app payments on it than a service provider that requires you to go to a banking channel first for making the payments. So that is a but obvious choice, because nobody wants to, spend more time going to the other platform, create a hassle, and then if the payment is not done in time, the product might get sold out, and lots of options that are that might trouble the user. So they will opt for a user service provider that is providing competitive advantage over their competitors. Then we have retention, customer retention. Integrated financial services can increase customer engagement and loyalty. For obvious reasons, you are likely to visit the more proficient and more efficient, more faster, providing convenience to the user platform again and again, and use it. In mostly cases, people tend, in the human behavior, people tend to use services for a longer term from a single service provider. They don't shift to new service providers unless and until they provide a very much what do we call it, a radical technology, that new technology that might come in the market and the other user is providing. They might not change their apps. They are more loyal to the service provider that they are using from a long time. Then we have cost reduction, lower transaction cost. Direct integration can reduce transaction fees and intermediary costs. When we don't have to switch between apps and go to third party applications, or engage in a third party verification or anything, then the cost of such transactions gets reduced, and intermediary cost as well. Reduced customer acquisition cost. Existing platforms can cross-sell financial products to their current user base. For example, if a service provider has created a base by selling a product, they can sell the financial services to the same user base. They're not going anywhere. They're the loyal customer base. They'll and in most of the cases seen these days, these transactions take up very fast, and the current user bases that are using one platform for such services are more likely to use the other platform provided by the same service provider as well, if they have a loyal customer base. Then we have innovation and scalability. Scalability is basically the expansion of services, and innovation is providing new and more refined technological options to the users. The financial services can be scaled quickly across the platform user base. If then we have continuous innovation, ongoing development and integration of the new financial technology creates a better impact on the existing user base. Then the risk. What are the risks for embedded finance? So major risk, as we discussed earlier, the major key point in the component was regulatory compliance. So regulatory compliance becomes a risk as well, because complex regulations, navigating the complex and varied regulatory landscape across different jurisdictions can be challenging, can be very much challenging for the compliance authority or the governments to make such standardization. In today's world, the landscape is changing, is so dynamic and changing every day. So it is very complex to create such regulations and effectively uh, make them applicable effectively. And the license requirement, obtaining the necessary licenses to offer financial services can be time consuming and costly. Very much effective in our country as well. Then, like we all know that licensing would take up the major portion of starting such a business and or providing services, that the businessman might look for other options in that case. So that is a risk in such a case, because banking, for obtaining banking license and or insurance licenses, uh, it is a very difficult and time taking process. Then we have the data privacy and security. Data protection is the foremost requirement of a user, that his or her data that he is sharing or any uh, finance on any application, that might not be shared with any other third party application or databases. So providing security to the data of the user is of prime importance. Which should be compliant with privacy regulations such as GDPR and CCPA. Then we have cybersecurity threats. Cybersecurity criminals are waiting for such opportunities where they get option to sell data, or attack a customer on basis of their information that was shared online, that might cause a financial loss to the user, and that can be terms in terms of money, in terms of data, mental harassment, and the recovery in such cases are very slow, and it is a very hectic process. So increased risk of data breaches and cyber attacks as financial data is integrated into non-financial platforms, because the scope will be wider now. Earlier, the cyber criminals had to target only financial banking platforms to get the user banking information. But now, if they are integrating financial information in non-financial ecosystem, then the scope for such criminals has increased, and such attacks are increasing day by day, where there is a risk of data breaches and cyber attacks, because the scope is wide now. Your financial data is available with the every application that you're using uh, has your financial data and information. So it is more likely now that your data will be sold on platforms, and in there are chances have been increased for cyber attacks. New methods of attacking and obtaining uh, money and causing harm to people are increasing day by day. So then the technology integration, legacy systems, integrating modern financial services with existing legacy systems can be technical challenging, because uh, technical systems are not built in a day. They take huge manpower, huge cost, huge processes to build technical systems. Even a little bit of change to bring a little bit of changes in the system is a huge task. So integrating such mammoth technological services in your existing systems is a very challenging task and requires very high cost of uh, expertise, expert individuals who might take a lot of time and prove very costly for the organization. Then once we have integrated the system into the financial services into the existing systems, then we need people for the smooth operations. Then we have to provide teaching training programs for the existing teams or hire new technical expert professionals. That is called system interoperability, ensuring smooth interoperability between different systems and platforms. Then we have user trust and adoption. Trust issues. Users may be hesitant to trust non-financial platforms with their financial information. As it happens in most of the cases, you might not share your financial information with every other non-financial platform because of the trust issue, of the security breaches issue and all that. So that is a major point as well. And the adoption hurdles. Convincing users to adopt new financial services integrated into familiar non-financial platforms. The big question would come here is, why should not I purchase my financial services from the financial providers or the traditional systems like the banking and the insurance company, and purchase it from the non-financial platform that is not even an expert in such field? That is the major reason for worry for users. They might not adopt easily opting financial services from non-financial operators. So post challenges, we have risks. What are the risks involved? First and foremost, the financial risk. We have two types of financial risk, that is credit risk and the market risk. The credit risk is the risk of customer defaulting on loans or failing to fulfill financial obligations. So now that it has become easy for anybody to take small loans for their transactions on e-commerce or any other non-financial services platform. So the transactions of such type will increase a lot. And when such transactions will increase, the risk of customers defaulting on loans is also going to increase, because these were the people, or what would we say, half of the people were those people that did not have access to the financial traditional banking systems, which might ensure the proper verification and what do we call it, the eligibility of the such user to pay back the loan amount or purchase amount by its own. But it is not happening on such non-financial platforms. They are providing you financial services on the basis of their non-financial customer base. The risk of customers defaulting on such loans or failing to fulfill such financial obligations is greater in such uh, terms. Then we have the market risk. Exposure to changes in market conditions that could affect the value of financial products offered. If the market, if the conditions are market dependent, then the value of the such financial products might vary, and sometimes it might become inefficient for such platforms to provide such services due to the change in market conditions. So this was the financial risk. Then we have the operational risk, system failures. Uh, we have not seen very often, but system failures can happen anytime, and uh, the risk associated with system outages, technical failures, and or the integration issues are huge. Because nobody can predict a system failure all by taking enough uh, data storages and the data centers, taking enough precautions on security. It might happen, the systems might fail at some point, and it is a huge risk for such services. Then the risk of fraud, increased potential for fraudulent activities as financial services are integrated into new platforms. Obviously, when the scope of financial services are increased without the necessary or the actual precautions where the traditional service providers take, the non-financial service provider might not be taking, not in 100% cases, but might not be taking such uh, precautions. And when the services are integrated into such platforms, the risk of fraud increases to a lot. Then we have reputational risk, brand damage, negative customer experience, or data breaches can harm the reputation of the platform. If a service provider expert in the field of providing travel services is providing travel insurance, and in any case, if a customer or the user faces such negative experience in such a case, then it is likely that he will uh, create a create an outage on it, post it on social medias, and provide a negative publicity for such application, that they are charging exorbitant amount of fees for such services and providing insurance and such, and still they are not able to provide the uh, protection from any harm that was supposed to be caused. So this is the brand damage, that brand can take a hit for such negative customer feedbacks, and it can happen even if it is not intentional. It can happen to any company or organization, that a customer might not be happy with their services and chooses to publicly defame such organization, or causing harm to the brand value of such company. Then we have the customer trust. Losing customer trust if financial services are not managed effectively. Obviously, the brand damage will happen, but additionally to the brand damage, the customer will be losing trust on the capabilities of such organization to provide financial services along with their non-financial services. That is the risk, reputational risk, brand damage, and customer trust. Then we have the compliance risk. Non-compliance penalties, fines and penalties for non-compliance with financial regulations. It might happen or so that because it is not their core area of work, so non-financial platforms might miss a few things or few compliances to comply with, then face fines and penalties for such misses. Then the regulatory scrutiny, increased scrutiny from regulators as financial services are integrated into non-traditional platforms. financial services are the most or heavily regulated services that are being provided. So if a non-financial service provider integrates financial services into his platform or into his organization, then there is a higher chances that the agencies or the regulators might be screening them more, might be scrutinizing them more, because there lies the risk of default, because they're not the experts and they are providing it as an additional services. So regulatory scrutiny will be increased a lot, and the agencies will be uh, asking questions about each and every process, even after taking the approvals. Then we have the strategic risk, misalignment with core business. As we have also touched this point earlier, financial services may divert focus from the platform's core business activity, because it is more likely uh, to happen because the core activity might get sidelined, because providing financial services is a huge task. It is not an easy task. It is a huge task and require the expertise, the manpower and the costs to provide such services. And when a growing company or a setup company also, which is stabilized, provide directs their more amount of manpower, cost, and expertise in this direction, then they might face a shortage in the core business area. Then people might not be able to focus, expert people might not be able to focus on the core business, which may divert attention and may cause losses to such organization. So it malignant with misalignment with the core business is a strategic risk. Then we have the resource allocation. Allocating resource to develop and manage financial services may impact other areas of business. It is but obvious, because while allocating resources, the company strategize about what is more important, and for obvious reasons, the core business of the company is the most important area where the resources should be allocated. But financial services, due to their nature, require more expertise and technical knowledge. So they might have to allocate more resources on such services that might divert their strategic planning in such a case. Then we have the partner risk, dependency on the partner. Reliance on third-party financial service providers and their ability to deliver services effectively. Not every company might choose to provide in-house services. They might take the help of third-party experts on such matters, where they would partner with some financial services or banking uh, or insurance service providers to provide such services that will be integrated into their non-financial services platform, and they will be now dependent on the third party to deliver effectively, for them to deliver effectively to the users, which might create a risk, because not every third party would be so efficient in providing the services, and they might face glitches and all sorts of technical problems or system outages, which might dent their image or cause the customers to go to other service providers, loss of customers. So reliance on third party financial service providers is a partner risk. Then we have a conflict of interest, potential conflict of interest between the platform and financial service provider. There might be conflict of interests. One might want one thing, the other might want the other thing. So there may arise a lot of conflicts on various points, and which is a partner risk. Addressing these challenges and mitigating these risks require careful planning, robust risk management frameworks, and ongoing collaboration between financial and non-financial activities. So careful planning is required, obviously, but risk management frameworks have to be robust, and the collaboration between financial and non-financial entities should be 100% on point. Only then it is possible. So after discussing all the challenges, risks, benefits, applications, now we take up the first case study, Uber's financial services. Uber, as we all know, is a ride sharing app or that provides cab services, shuttle services, rental cars, and everything. So Uber has integrated financial services such as payment processing, lending, and insurance into its platform. So obviously they have in-app payments, they are providing lending, pay buy now, pay later services, and insurance for the rides into its platform. What has happened is it has created a lot of benefits for the users. Their user experience is enhanced, obviously. The revenue streams have increased for Uber. They might be earning more from the additional services apart from their core businesses. And the improved customer retention. Customer is more likely to stay where all the services are embedded into one platform and they are able to provide it from one place itself. And the outcome is such that a significant increase in user engagement and transaction volume. The users are increasing day by day, the transactions are increasing day by day. There are millions of transactions being happening every second. So it is the positive impact of embedded finance in the Uber's scenario. Now we take up Shopify's embedded payments case study. So Shopify is a platform that allows you to sell your product. Shopify offers embedded payments along with the selling feature that is their core business. So at an additional revenue stream they have created by allowing embedded payment solutions that allow merchants to accept payments directly on their online stores. If a seller is selling his goods or services through Shopify, then he can accept payment directly on Shopify, and that the intermediate system is being created and provided by Shopify for obviously a fee or charges that they are providing. So what are the benefits that it has created? That it has streamlined payment processes, increased sales, and improved customer satisfaction. Obviously, when a seller is being able to sell his products without any hassle and he's able to accept payments on the same platform itself on the basis of a fee that is being deducted on the payment itself, then he'll have no reason to move to another app because he's all the solutions are being provided on a single platform only. That is streamlined payment processes, increase sales, and improve customer satisfaction. And the outcome of such embedded payments for Shopify is growth in merchant adoption and higher transaction value. More and more merchants are day by day signing up for Shopify for doing their business, opening online stores on Shopify, selling their products from the remote areas to the entire part of the country or overseas as well. And when the merchant adoption increases, then the transaction values go up because people now more and more people are flocking to Shopify to buy from such merchants. The transaction are increasing and a different revenue stream have opened up for Shopify by providing embedded financial services into their own platform. This was the case study. So while before we move forward to the next topic, what are the future trends that embedded finance will see in the long term? Obviously, the growth of fintech ecosystem, fintech, or what we call it, financial technology, the companies that are providing financial technology services, that are going to see a massive growth in the future. Because as the technology is improving, the speed, customer experiences, and uh, the advances in artificial intelligence and machine learning are going to see trends that are going to embed financial activities in every aspect of services. So we're going to see embedded services in every nook and corner of the businesses that are being provided. Then expansions in new markets will be explored. People, as we had discussed, the unbankable or people in remote area that had no access to such financial services, or the markets that had no access to unorganized sectors. So these new areas will open up, and this will allow people to expand into new markets. It will also create a sustainability and ESG integration, because when we have been providing services at one platform, then it will be better for the environment, as the transaction cost is reduced, and people are more and more moving towards a sustainable environment and focusing on environment, social, and such factors. Increased adoption of blockchain and cryptocurrencies. So these how blockchain and cryptocurrencies will be adopted more, as transaction platforms will opt for blockchain and cryptocurrencies due to their decentralized nature and secured transactions nature. Smart contract, use of blockchain for automating financial agreements and transaction through smart contracts, that is not that is free from being monitored by any other agency. So that is going to create that one original contract, that is called a smart contract, that will not be altered on behind anybody's back. So these will create more opportunities and uh, for service providers in the blockchain and cryptocurrencies. Then we have the embedded wealth management. How embedded wealth management refers to the integration of wealth management services directly within non-financial platforms, such as e-commerce websites, social media apps, or digital wallets. This allows users to access investment advice, portfolio management, and other wealth-related services seamlessly without needing to leave the platform they are using. Some key aspects or examples in such case of embedded wealth management are the robo-advisors, automated investment advisor that is being tailor crafted or customized for your needs. Platforms can offer users automated algorithm driven financial planning services with minimum human intervention. Nowadays, we are seeing it as a option as well, that we have chatbots everywhere, on every application, on every website, that we for answering our questions and answering our queries, so we don't require human intervention at for 20 or 30% of the questions that are very common questions, that are not being what do we call it, that are not very technical questions, then these are questions are answered by the chatbots itself. So taking a clue from that, the robo advisors will be giving automated investment advice to the people. So that is being crafted on the basis of artificial intelligence, cost effective solutions, because they will provide affordable investment management, wealth management accessible to a broader audience. That is not just to wealthy people, but for every user. They are creating a automated solutions for such. Then we have fractional investing, low entry barriers, broader accessibility, personalized financing, AI driven insights, use of artificial intelligence for such. services, leveraging AI to offer tailored financial advice, as we have discussed, and financial strategies based on individual user profile and historical financial data and their future goals. Goal-based planning. Users can set specific financial goals. For example, if a person is aged at 30 years and he wants to retire at 50 years, he can put in his service years left, and then the goals to buy a house or finance their children's education and receive personalized advice to help achieve them. That is totally managed by technology and artificial intelligence without any human intervention, though that is very cost effective uh, personalized financial planning that will be provided. Integration with everyday platforms, e-commerce and payments apps, social media and messaging apps, holistic financial services, and user-friendly interfaces that are very helpful for the people to surf through and choose their services. Real-time data analytics, instant portfolio update. Users can receive real-time updates on the investment portfolios and market trends. Behavioral analytics, analyzing user behavior to provide personalized investment recommendations and improve user engagement. Then we have enhanced security and compliance, adherence to the regulatory compliance, ensuring that embedded wealth management services comply with relevant financial regulations and standards, data protection, collaboration with traditional financial institutions, sustainability and ESG we have already discussed. So, embedded wealth management is transforming the way individuals access and manage their investments, making wealth management more accessible, personalized, and seamlessly integrated into daily digital experiences that we are encountering in our daily lives. So, these were the future trends in embedded finance. Now we move to the other topic, quantum computing. So, what is quantum computing? It is a technical topic. I'll try my best to make you understand in simple language. So, what is quantum computing? Quantum computing is a type of computing that leverages the principles of quantum mechanics to process information. Basically, it is different from classical computers, which use bits to represent data as zeros and ones, as we all know. Quantum computers use quantum bits, or what we call it qubits. So these qubits are capable of being capable of existing simultaneously, either zeros in both zeros and ones. So it is a multidisciplinary field comprising aspects of computer science, physics, and mathematics that utilizes quantum mechanics to solve complex problems faster than the classical computers. Particularly in fields like cryptography, optimization, material science, and complex systems simulations. So, it is a type of computing that is faster than the classical computing that we all. It is that is quantum computing. What are the key concepts? Key concepts are the quantum bits or qubits, in which the bits are used to process the information, the basic unit of quantum information. A quantum information exists in the form of qubits, analogous to classical bits, but capable of representing 0 or 1 or any quantum superposition of these states. So we just need to know that the quantum bits are the basic unit of quantum information. What is superposition? Superposition is a principle where qubit can be in a combination of both 0 and 1 state simultaneously. It is not like that it is existing in 0 or 1. It can exist both simultaneously, which exponentially increases the computational power, because it is now being able to compute simultaneously in zeros and ones. Then we have the entanglement, a phenomena where qubits become linked, such as the state of one qubit directly influences the state of another, even over large distances. So when they are existing in simultaneous states, they tend to influence the other qubit, the state of another, even over large distances. That is entanglement. Then we have the quantum gates, operations that change the state of qubits, similar to logical gates in classical computing, but capable of more complex transformations. So they are capable of more complex transformations, but similar to logical gates in classic computing. When we then we have quantum algorithms specifically designed to take advantage of quantum mechanics, such as Shor's algorithm for factoring large numbers and Grover's algorithm for searching unsorted databases faster than classical algorithm. So what we need to know here is quantum computing is way faster than the classical computing. It can make calculations and solve problems at a very fast rate. So how it is important for finance, that we'll know in the next slides. So now we have the applications of quantum computing in finance, where we can take use of quantum computing for better financial services. Number one is portfolio optimization. Quantum algorithms can analyze vast amount of data to find the optimum investment portfolio, balancing risk and return more efficiently than the classical methods. You don't have to choose the portfolio manually. We just have to put in the needs of the user, their goals, or how much money or how much risk they can take, how much money they want to invest in a longer term, and then it will be divided into a perfect portfolio to the basis of quantum computing, which will find the optimal investment portfolio for the user, balancing the risk and return more efficiently than the classical methods. Then we have risk management. Quantum computing can enhance the modeling of financial risks by processing and analyzing complex risk factors more quickly and accurately. Risk management is a very important field in the field of finance, very important aspect of finance, or I would say, because finance uh, in a whole is a risk activity only, because there is always a risk of default involved in financing activities. So to manage that risk requires great level of skill and technology. So quantum computing will enhance the modeling of financial risk by processing and analyzing complex risk factors more quickly and accurately. It will make calculations and process the data more efficiently and faster than the classical computing, then the risk management can be done more properly and at a faster rate. Then its another application is pricing and hedging of derivatives. Quantum computers can improve the pricing of financial services by solving intricate mathematical models faster than the traditional computers. Obviously, when it is making faster calculations, it is poised for making greater discoveries. And what is the best field to use it in other than pricing and hedging of derivatives? We can use them to price the derivatives, use them to in the hedging of derivatives, because it will solve the intricate mathematical models faster than the traditional computers and arrive at a solution that is the most appropriate one. Then the fourth application of quantum computing is fraud detection. Enhanced pattern recognition capabilities of quantum computing can significantly improve the detection of fraudulent activities in real time. When a computer is used to fraud detection, the capability lies in analyzing the patterns where the things might have gone wrong, the patterns where the data is missing on specific dates, on specific patterns, the user info is changed, or whatever the gap that is being provided in the huge set of data, then the quantum computing can find such frauds or risk such errors by enhancing the pattern recognition capabilities of the computer, which in real time will affect the problem solving capabilities as well. Then we have the algorithmic trading. The quantum computing can analyze massive data sets, a massive, huge number of data sets, and execute trades at unprecedented speeds. That is, without any human intervention, which is poised for potentially uncovering new trading strategies and opportunities that are still not known to now. Create new algorithms day by day, create new strategies effective that are more effective in uh, providing trading solutions for better profit earning and risk management. So these are the applications of quantum computing in finance: portfolio optimization, risk management, pricing and hedging of derivatives, fraud detection, and algorithmic trading. Then Then we have credit scoring and risk analysis. By analyzing a more comprehensive set of factors and interactions, it can provide more accurate credit scoring and risk assessment, which will obviously enable the user or the service provider for better decision making on the basis of such credit scoring. Then we have cryptography and security. What is cryptography? Cryptography is the collection of secured information and communication techniques employing mathematical concepts and algorithms used to design the contents of messages. So it poses both a threat and opportunity for cryptography. While it can break traditional encryption methods, it also enables the development of quantum resistant cryptographic graphic algorithms. Then we have market simulation and forecasting. It can automate and improve the accuracy of regulatory compliance, making it easier for institutions to adhere to complex financial regulations. So these were the applications of quantum computing. Then we have the benefits. Exponentially faster computation. When computation is being done by classical computers, we already know that how fast it is, and faster than the manual calculations and computations. But when we talk about quantum calculations or quantum computing, it is not even more faster. It is exponentially faster than the classical computing. So it will give results in a record time that we can expect. And when such calculations or computing is done in such fast manner, it is poised for solving very complex problems, that are problems that were hard or difficult or unsolvable for manual by manual means or classical computer means. Quantum computing is expected to do that in very timely manner. Then provide enhanced security. Security will be provided to the data in an enhanced manner. Better risk management, as we have discussed. More accurate financial modeling, because it can run the mathematical models simultaneously at a very higher speed. Faster and more efficient trading strategies, algorithmic trading, where users can develop different strategies on the basis of different algorithms, beneficial for the organization or the individual. Better credit scoring and innovation and competitive advantages. Obviously, anybody using quantum computing over classical computing is more likely to have a greater impact and competitive advantage on his competitions, because it is highly possible that such a competitive advantage will lead to more users and more loyal customers in the long run. So these were the benefits of quantum computing. We have challenges and risks. When such technology is present and we have to access such technology, then giving the technical knowledge for accessing is a great challenge. And such technical complexity might be a hindrance in providing or a challenge in providing efficient quantum computing, because people might need training, might need to understand the concepts and use it, as it is different from the classical computing. And then the same challenges that that they might face is adoption, more difficult to adopt over the traditional approaches where they are used to it, taking time, not understanding its importance or such. Then we have scalability. To scale such a technology on a organizational level or a country level or in the worldwide level is a huge task, because it involves huge costs, huge capabilities, expertise of individuals that they that they might not have, or they might have to take the outsource individuals for such process that might prove very costly. So scalability is uh, not a very good option in this case in quantum computing. Then algorithm development requires huge uh, technical knowledge and operations individuals who might provide logics and uh, options to such computing ecosystem, which is a huge challenge. Then limited availability of expertise, and to have such experts present in the beginning era of such technology is a great challenge, because people might still be learning about quantum computing. Still, it is being taught at university level and the college level, and not much opportunities might be there for freshers or young people to learn it without having a background in the supposed field. So not so for creating an expert pool of such technicals or technicians or experts, it might take time. And currently, the limited availability of expert poses a challenge on it. And then we have already discussed such computing needs requires a huge cost, that it might become a challenge for organizations to adopt quantum computing, giving their costly nature. And you because it becomes very important for the organizations to use their resources very precisely. So spending on new technologies which might or might not help them in creating new revenue or more revenue, so it might pose a challenge for them to accept or not accepting. We should move forward to a case study to understand the concept better. JP Morgan's quantum risk analysis. JP Morgan has utilized quantum computing for advanced risk analysis and portfolio optimization. The benefits of such analysis and portfolio optimization are that the risk assessment accuracy has improved. They are able to better predict the risk associated with uh, the programs or the challenges they are facing. So they're able to better anticipate the risk and mitigate them accordingly. And then faster computation times. Anything that is being done at a faster speed gives you competitive advantage. That makes you better than the others because you are doing it at a faster speed, that you are more likely to reach to your finishing line at a fast in a more uh, less time and faster approach. That is great for organization, or in this case JP Morgan's case. And the outcome of such benefit is that the enhanced risk management strategies are being created and the financial performance is being improved. How it is being improved? Because quantum computing is providing them with a risk assessment at the beginning of any program or deal. So they are able to tell that how much risk they need to take if they need to be profitable. So that is creating a uh, balancing favor, that they are able to anticipate that if this deal is going to be beneficial for the organization, or this project or this program is going to be beneficial for the organization or not. So they are taking much more informed decisions at the beginning only. This is improving their risk management strategies and financial performance in the end, obviously, because it will have an impact on the financial performance in the end. This was JP Morgan's case study. Then we have IBM's quantum financial services case study. As you all know, IBM is the oldest company to, first company to create computers at such a worldwide level. So they have huge resources and huge organization providing services and hardware and software to the entire needs of the people around the world. So they provide quantum computing solutions for financial services, focusing on cryptography and fraud detection. So IBM is providing services here on the basis of quantum computing to financial organizations or non-financial organization for financial services. Quantum computing is being here used for financial services, focusing on cryptography and fraud detection. Benefits of such are increased security and faster fraud detection. When security is increased, computing at a faster rate, obviously the faster fraud detection, avoidance, or errors and such problems can be solved at a faster rate. The outcome of it is such that adoption by leading financial institution, their services, IBM services are being now used by leading financial institutions for improved financial security. They are using the services of quantum computing provided by IBM, which is leading them to their improved financial security, fraud detection, and an overall greater impact on their financial performance. So this was the entire discussion between the evolving technologies in the future that we have discussed: embedded finance and quantum computing and its impact on financial services, the impact of the future technologies that are going to change the landscape of our financial systems, the way the organizations behave, and how we can use these technologies for our betterment of our profession, the financials, the because the core of financial services are being provided in the country by chartered accountants. So more and more knowledge as we spread on financial technology, more and more people learn about such technologies and their existence in our world, more and more people will be interested in learning them and providing their expertise. So when we combine finance and technology together, then we are creating an atmosphere for us to excel in a field in addition to our core expertise, that is finance. So in addition to finance, we have a chance to learn technology as well, and where we can use this technology. There are technical experts sitting all around the world creating such technology. What we can do is we can learn such technology and promote such technology for use in our organizations to make people understand their importance and create a database of experts that are capable of providing expertise on such technologies and financial technology, fintech companies, expertise to fintech companies all around the world. And we as a profession will grow in such a scenario, because the in today's world technology is the most important factor. So if we integrate our learnings and our expertise, so that will be beneficial for us, the profession, the country as well, because we'll be able to create an environment where we as financial experts uh, will be an experts on technology as well, that is being integrated into finance for providing better services to the users. So this is it from my end. If there are any questions or doubts, then we can entertain them.
Thank you, Sajal for your such a wonderful deliberation. Now I invite CA Karan Garg, past chairman, Ghaziabad branch, for further question answer round. CA Karan Garg.
Thank you, Navendraji, Chairman Gazat Branch. And thank you, Sajalji, for your such a nice deliberation on finance and accounting. And I hope members would have learned many things from your deliberation. And it would be a great help for them. And we should teach finance and technology to our clients and we should spread. And moving forward with the question and answer round, do we have any question for CA Sajal Tyagi ji? Because I don't see anything in chat box as of now. Chairman sir, can we move forward for the next agenda for the summary?
Yes.
Just
Yes, sir. You can go to the summary of
Yeah.
the program. Summary of the program.
There is a question as well we have received now.
Yeah.
Why blockchain has not picked up much as was expected in financial sector?
So,
Sajal ji, there is a
very
question
good.
why blockchain has not picked up much as was expected in financial sector.
It's a very good question, and it was my initial area of going through such technological understanding, that why blockchain is not picking up as it was expected in the financial sector. So there are many reasons. The most important of being is the regulation. The governments are scared because they don't know how to regulate blockchain technologies. They are still creating the ecosystem that is going to regulate such uh, technology and provide a safe ecosystem for people to access services and provide services in a blockchain ecosystem. So regulatory being is the most important. Then the finance, its higher cost also is a issue, because mining of data requires a huge cost on financial side and as well as the environment side as well. So it is not picking up much because of these two reasons mainly. So these are the reasons why it is not picking up, and it is expected that in the future people might be more willing to accept it in their organizations, and the cost will come down as well, and government will provide a secure ecosystem where we can access such technologies.
Thank you, Sajalji. Now, the summary of the webcast was: in this webcast on embedded finance and quantum computing, the participants must have gained insights into the evolving landscape of financial technology. The session has begun with an introduction to embedded finance, exploring its key components such as APIs, banking as a service, payment processing, and lending. We had discussed its transformative applications across industries, its benefits along with the risks and challenges. The webcast then into quantum computing, covering fundamental concepts like qubits, superposition, and entanglement, and examining its potential impact on the financial industry, particularly in areas like risk management and cryptography. That's it from my side. Over to Navinduji.
Thank you, Karanji. Now I move forward. I invite CA Vibhor Jindal ji, Vice Chairman Ghaziabad branch, for formal vote of thanks.
Thank you, Navinduji, Chairman Ghaziabad branch, for inviting me for formal vote of thanks. It has been such an honor to be a part of this wonderful webcast on embedded finance and quantum computing skills, organized by the Professional Skill Enrichment Committee ISI. On behalf of the Professional Skill Enrichment Committee ISI, we would like to extend our heartfelt gratitude to our speaker CA Sajal Tyagi ji, for his enlightening session, and CA Dr. Anuj Goyal ji, Chairman Professional Skill Enrichment Committee ICI, and our own and CCM from our own city Ghaziabad. CA Supriya Kumar ji, Vice Chairperson Professional Skill Enrichment Committee ISI, for their active guidance. Sincere thanks to the event enablers for CISU of SI, my colleague in the branch, my chairman, CA Dr. Navindu Garji, Secretary, CA Dr. Abhay Kansal ji, Treasurer, CA Rakesh Singhal ji, Sikada Chairman, CA Ankit Goyal ji, past Chairman, CA Karan Garg ji, and all the team members who enabled the webcast throughout. Our today's speaker, C.S. Sajal Tyagi ji, and other stakeholders made the webcast a memorable one. Finally, we would like to thank all of you present here and helping us make this webcast a grand success. Thank you, one and all. Thank you, Sajal ji.
Thank you.